Hey, what's going on? So I'm explaining what happened this week so far. So I told you for people to actually watch the videos and not the shorts, you need to put the Fibonacci on. You can use the Fibonacci in an advanced way. So like I was telling you, every single week price is either making a high, it's making a high and a low for the week. You have to go back in time for whatever you're trading and take a look at it. Like every single week is going to create a high and a low on average. What I mean is it may go a lot further than this high. It may go all the way up here, or it may go a lot lower than this low down here that I drew up right there. But every single week, it's going to make the average high and low. I figured out what that is for U.S. oil. Okay, that's what this. Okay, so um, and these fibs right here, you'll come up with your own levels. But these fibs right here is placed on the London session from 2 to 5. I actually used it from 1 to 5 for oil, even though that's just my own stuff. But I think it's from 2 to 5. If you put the Fibonacci on the high and the low and start looking at how far price retraces down, how far it goes above the fib level, then you'll start to come up with levels where if price touches it, it's going to come up to, like for instance, when price touch, even in the past, like this was all the way last week. But you see when price came up to here on that fib right here, when it touches this line, it's going to come up here to the yellow line. Okay, so the power behind this is if you start to see retracements, then you can start buying as price is dropping because you know it has to come up to here. Let me try to. I didn't make multiple examples of this, but let me explain. Let's see. Like right here, when I have research data for years and years that when price touches this level here, it's going to come up to the yellow line. So let's take a look to the right. You see that price touched it here. You have to come up with these levels yourself. When price touched this line here, it's going to come up to here. So that means that when price hit that line, it's a specific Fibonacci level that's been back tested for years and years. Not years and years that I did it, but as far as the research. That means that when price was dropping down here, guess what? I was buying. Why? Because I know I had to come up to here. Why? Because it's years of back tested research. And you see, as price was dropping, you could have been buying because you know it's a 98% chance it has to come up to here based on data. You see how all these fibs come into confluence? Because look, when price touches this line here, it's going to come up to here. You see that? And that lines up with this one here as well. Like you start to see that you can hold these buys. That's the whole point of this. You have to come up with these levels on your own. I'm glad I did. You know, I don't always trust. I do trust this, but sometimes I don't. You have to understand the psychology of this stuff. Sometimes you may not trust yourself, but you have to trade what you see, not what you think. Okay. So this is a combination of things because look, when price touches this line here, it's going to come up to here. You see, and then that lines up with this one. When price touches this line, it's going to come up to here. So you have to keep these fibs on. It's going to take you some time to really figure out what your own levels are. But this stuff right here, I'm really glad I have this. I wish I had it for the shorts. I have levels down here, but these are not. I got to figure. I got to change this because I really would like to have the same levels that I have down here for that I have up here for down here. But I got to fix that on my own. Anyway, uh, so that's what those levels are. Now let's go over here to where I messed up at. I thought price was going to take out the high because it was so close to it. And I had the fib level here. Remember, when price touches this line here, it's going to come up to here. You got to come up with your own fib levels. Okay. And then I was like, okay, well, I had no data. All these fib levels to the left had already been hit. So I was holding on to a buy. Now, if price would have touched this line here, it would have came up to here. Okay. Now, price did touch this line here, and it did come up to here. You see that? Precisely. It literally came up there precisely. I'm telling you, I have this stuff down to detailed precision. You see the wick came right up there. It may have failed. Actually, I may need to mark this up real quick. I think it failed by a few micro points. Yeah, it did. Nah, actually, that's crazy. It's not crazy because I set the shit up like this. But yeah, it did fail by a few micro points. I mean, I have to see. This how it works. Like if you see it failed, then you have to move this one down slightly. So I have to go back in and move this one down because I would have been holding for price to come up to here, and it would have been I would have been in crazy drawdown. Okay, let me actually take a look. Let me take a look at this real quick because I got to make sure. I put it on from 1 to 5 a.m. So I got to make sure that the fib is on here precisely because this stuff is precise precision. Okay, so if I zoom in over here, I put it on from 1 to 5 a.m. So that means that, yeah, so whatever the highest high is and the lowest low is from 1 a.m. to 4:50, your levels may be different. It may be 2 to 5 a.m. So actually I have to readjust this because it failed at that. Yeah, this is the lowest low. Yeah, I'm just trying to go back in and change it. I can't change it right now because I don't want people to know my levels like that. I worked hard to come up with these levels. So let me just put a note here and let me finish up the video. Like I said, I have an app that can go on your YouTube channel. If you have a YouTube channel, it can record, it can analyze all your videos and come up with a trading brain for you. You know, your own AI trading brain. And it said that price would take out last week's low based on the way I understand this stuff. But I just started using it and I was like, man, it's going to take out the high. It's so close to it. But it didn't. Now, let me explain this. So I was in on a buy right here and I was mad because I had took a loss early and I said, damn, I'm basically at break even right here. So I said, hopefully I'm right. But looking back on it, I didn't have any, based on my magical fibs, I didn't have any justification to hold the buy. If price would have touched this line here and then start retracing down, I would have been buying because I knew price would have to come up to at least here. This line right here means if it touches this line, it's going to come up to here. This one means if it touches this line, it's going to come up to here. And that pink one means if it touches that line, it's going to come up to here. These are based on fibs that I have to the left. Okay. So I'm thinking like, why am I holding on to a buy when I have no justification that it's going to come up to here other than hope? Because I was looking at the word hope. I was like, so I went ahead and sold these longs at a small loss. And then I was just cooked. I was like, man, why am I doing all this when I have a fib that sets up? I call this the dojo. Okay. I was like, well, I have it set up for years and years of back tested data. If price comes down to here, if it starts, you see, I was in for a buy right here. That's what I'm saying. This is the power of the Fibonacci. This is not using it the traditional way. You people out there using it the traditional way, the 61.8, 38.2, that's cool. But this is a very advanced way to use it. Okay. And like I said, these levels on here, you have to go back and look at I have 10 years of data that says, you know, if price touches this line here, it's going to do certain things. Okay. It's not random at all. So it's kind of weird I came up with this shit. But basically the way I have it set up is if price touches this line here, it's going to come down to here. And when it makes a low and that wick low is breached, it's going to come down to here. So I was like, damn, you know what? Price is probably going to take out last week's low. I didn't see this happen over and over again. Even with that, I still didn't trust it. That's what I'm saying. Like, it's a psychology game, man. Like, you know, I have to work on things to trust myself, you know, because I have the data that says what I have is special and superior. So when price touched this line here, I went on ahead and went short. That's what this is right here. But I have data that says I can hold it down to here. This is purely a Fibonacci retracement trading. This is not the structure at all. I understand the structure. But to be honest with you, I need more than just, you know, this is a bullish breaker. Price is going to come down to here. I think, you know, people need a little more than that. That's ICT's teachings, which is superior, but I think people need a little more than that. Okay. Or I believe I need a little more than that. So if price touches this line here, it's coming down to here. And I still sold early. I sold right here. I felt bad about that because I had data that showed it's coming down here. I just didn't want to eat the drawdown. I didn't want to, because remember, I had took 2 losses up here. I took this loss. Remember? See, this is the psychology. I took this loss here, and then I was at break even here, and I thought price would probably come up to take last week's high, and then it went down, and I sold here. I sold at a small loss, 2 positions at a small loss, and I was at break even here, so my psychology was all messed up. You see how that works? Even though I had data that says it's definitely coming down here, I just didn't want to deal with the drawdown. I didn't want to deal with price probably coming all the way up to this bearish mitigation block and being in drawdown and probably coming all the way up here, you know, and I just didn't want to deal with that. You see how crazy that is? I knew it would come down to here. I just didn't want to deal with the drawdown, so I ended up taking it early. I ended up getting out early. And when I got out right here, to be honest with you, I ended up making back what I lost up here. And then I had borrowed money from my other account. So I had to pay back money to my main account. And basically this, I was just fear, this is just fear right here, just stupidity in a way. Because I knew I had data that said price would come down here, but I still sold. I did it because of risk management, because I had already taken these losses right here, right? I was like, you know what, let me just get back the money that I transferred from another account and the loss that I had. So that's what that did right there. So I was basically just trying to preserve capital, but it's a weird thing. It is a psychology game. I mean, you can have data that certain things work, but it's like, are you still going to hold? Are you still going to trust it? Or are you going to trust yourself? So anyway, I had on demo, I went short right here as well. So I wrote this all the way down to demo. I sold right here because I have data that says if price breaches this line here, which it did here, okay, if price breaches that line and then it makes another low, it's coming down here for sure. Okay, so I went ahead and sold. I had 2 positions on. I sold down here, and then I sold at the low of the week, low of last week. So that's kind of what's been going on. Now what's going on is price touched this 32 line here. If it comes up to here, I'm buying. The price is definitely coming up to here, so hopefully I see a retracement down. It can go as low as to this yellow line, but it's coming up to here for sure. I'm taking that because I missed it last week and I felt bad. But because price had breached this line last week and it went up a little bit and then it went all the way down. And I was like, damn, maybe I'm wrong. And then price still came up here, literally touched that line and dropped down. So that's kind of what's going on. You have to understand the weekly high and the weekly low. Price is forming a high and a low every single week. And then you could take advantage of that. You have to figure out, like, this is the low. This is 10 years of the high and the low. That's what this purple line is. Okay. So what you got to do is you got to figure out what the average high is and average low. And then you have to figure out if price breaches a certain point, that it's going to just drop down to that low. If price breaches, a certain point, then it's going to definitely run up to that high. You see what I'm saying? Like, you got to figure that out. First, you got to figure out what the high and the low is of the last 10 years. Yes, it's going to take a few months of you sitting down figuring it out. But to me, I'm willing to do whatever it takes to be free. Okay? I don't give a damn. So I took the time last year around this time to figure this out. And but you have to. It's a point where a breaking point where if price goes past a certain point, it's definitely going to take out the low of the average weekly high and weekly low of the week. Then if price goes past a certain point, it's definitely going to take out the average high of every week. You see how that works? Thanks for watching.